Hi, it's Nick Jevick, and we're back with part 2 of Blueprint for the Letter of Intent. When we left off in part 1, we left off with reps and warranties. And in this part, we're going to pick up with indemnification, which is a close relative of reps and warranties. In the indemnification section, you're going to define what the seller will be indemnifying you against. And it's typically the reps and warranties that we outlined in part 1. You're also going to want to define the amount of an escrow that the seller is going to put in place to back his indemnification. You'll define the amount of the indemnification, the amount of the escrow, when the escrow kicks in, and how long the escrow will be in place. And while there will typically be limits on some of the items, you're not going to want to limit the indemnification for title, tax, or environmental issues, but be prepared that the seller will want to limit those to the total purchase price being paid. Next to price, the reps and warranties and indemnification will probably be the most hotly negotiated parts of your transaction. In the environmental section, even though we covered into reps and warranties, in this part you're going to want to make clear that the seller is delivering an environmentally clean company. In other words, any problems have either been corrected or there is an acceptable indemnification in place. In the process section, you're going to describe for the seller what takes place after accepting the letter of intent. There are a lot of activities that will take place to move to a successful closing, including due diligence, raising equity, bank financing, documentation. With due diligence, you're going to want to provide some guidance to the seller and help set expectations of what is involved when it comes to performing the due diligence. And for actions pending closing, in this section, present your expectations of the company between 1, the acceptance of the letter of intent, and 2, the execution of a definitive purchase agreement. Some items that would be included include 1, continuing to run the business consistent with prior operations, 2, not to increase compensation or pay any bonuses except as consistent with past practice, 3, not enter into any material agreements, and 4, maintenance of working capital accounts consistent with past practices. With confidentiality, as an acquirer, you've already signed one. So you're going to want to reaffirm that you're going to adhere to the confidentiality agreement that you've already signed. But you're also going to want to have the seller keep the terms and conditions of your letter of intent confidential. With exclusivity, you're not going to want your seller continuing to have conversations and negotiations with other suitors while you're spending resources performing due diligence and arranging financing. In this section, you'll want to have the company and its representatives cease all conversations and negotiations with other potential buyers. In the expenses section, you just want to make clear that each party is responsible for their own expenses. Closing date. Establish a best efforts closing date for the transaction. And while it's just a best guess, it does give everyone a target to shoot for. For assignment, you're going to want to include a provision that allows you to assign the letter of intent to your acquisition vehicle if you pursue acquisition opportunities using a separate entity. Make sure you have an expiration date for your letter of intent. A week to 10 days is quite reasonable. And then make it clear that for amendments that the letter of intent can only be amended in writing. And that's it. So if you just want to get down to the business of writing your letter of intent, you will find our LOI templates just what you're looking for. Easy to use, they come in familiar Word format, and they won't bust the bank. Visit us at www.ppm-templates.com. This is Nick Jevick. Thanks for watching.